Now, let's turn to the gambling space with VGW, Perth-based sweepstakes casino company with a large US business, has bought out its majority or minority shareholders to get across that news and what it means. Tom Waterhouse is joining us from Waterhouse VC. Tom, good to see you again.
Good to see you, Andrew.
Now, you'll have to explain to us, because I am not familiar with this company, although it is obviously an Australian success story, it would seem.
Yes.
What are VGW doing?
Look, Laurence Escalante basically was very innovative in the American market. So in the American market, they didn't have online sports betting until 2018 allowed across all the states, and only a few states allowed online gaming. But he came up with this sweepstakes business, and now they have sweepstakes, or they did have sweepstakes across the whole of America. It's just been banned in 7 states, but it allows you to effectively online game, but do it in a free-to-play mode where you buy gold coins and then you can cash them out. So he's found a way, maybe a loophole you could say, but it's really taken off. So it's now looking like it's going to be bigger than online gaming in the whole of America. And there's a little bit of uncertainty in that you don't know whether it's going to be banned, because 7 states have moved to ban sweepstakes, because obviously the regulated players don't like that this sweepstakes model has disrupted the whole game there. And so with this uncertainty, I think Laurence Escalante, there'd be no one better placed to understand the risk of regulation. And he's bought out his minority shareholders at a $3 billion valuation and 6 times earnings. So it looks like if he can keep quite a few of the states open, and it's growing very, very rapidly, he's the largest operator there in the US. And it looks like, I think you'd want to be going with whatever Laurence wants to do.
Yeah, I mean, as you say, given more states are now trying to clamp down on that, is there a risk that he sort of runs to a dead end in the
Definitely.
States?
Look,
and what would his potential pivot be as a
Yeah,
result?
look, there is definitely a risk, because obviously 7 states have moved quickly and it's changing rapidly. But I thought there was a risk years ago. I'm thinking this can be closed down, but it's been gone on a lot longer than what I thought, and you're buying a business at 6 times earnings. So, look, it's hard to tell, and that's why one party's getting a deal and the other party's getting a deal. I don't know the winner.
Meanwhile, you also got your eyes on a Swedish casino gaming studio. I find them obscure. You're in there, you know what's going on. Hacksaw Gaming recently IPO'ed, €2 billion.
Yeah, look, this is why we like B2B players, in that an operator like VGW faces a lot of regulation and a lot of risk. So they can be closed down. There's a lot of marketing spend to get players for sweepstakes. There's a lot of marketing spend for operators if you're FanDuel in the US or you're Sportsbet in Australia. But if you've got a supplier, you've got huge margins. So the way Hacksaw Gaming, they've just IPO'd in Sweden, $2 billion valuation, bit large multiple, they're trading at sort of 18 times earnings. But they've got an amazing business, because they create these games and it takes 2 employees or 2 team members to create the game. And when they hit massively. So they make huge revenue and they have distribution throughout the world. So you've sort of got this regulation protection because you're in every market. And so they've got a business that's grown rapidly. If you look at a multiple, they trade at a lesser multiple in comparisons to Evolution. But this is why we really like B2B, because if you get B2B right, the suppliers, you have massive upside, and you can grow businesses without the regulatory risk. You don't have the huge overhead costs of employees, and you don't have the overhead costs of marketing. So Hacksaw, they're a very switched on group. I think they've got a long runway. We're not investors in them, but we've looked very closely, know the leadership team there, and think they're a very, very, very impressive outfit.
This goes to perhaps what we see more broadly when you're investing in that, better to go for the picks and shovels rather than those doing the actual digging.
Well, they're a little bit harder to understand, the picks and shovels, because they're not in your face in terms of everyone knows the likes of Tabcorp, Sportsbet, Caesars, MGM and so on. But those operators, they face large regulation and taxation risks, and they've got headwinds, where the suppliers, they're a lot harder to understand. They're not a household name, Hacksaw Gaming, and they're not a household name, the likes of Evolution. But these providers, they're huge, and they have massively growing businesses. And if they can find an area that they solve, the big operators solve a problem for them, they have the ability to scale all over the world. So you're seeing that Hacksaw is probably in 35 different countries. So if one country closes a certain gaming or makes it illegal to have online gaming, they're in 34 others. So we really like the supply side. We only concentrate on suppliers. We don't invest in operators. But yeah, this is why we focus on that area. And also, it's much harder for a normal bank to understand that's analysing these stocks. They can understand the operators because it's the same lines of the P&L. But for a supplier, it's a lot harder because you have to really understand what that supplier does and whether it's fulfilling a need for an operator, and how likely is it to be able to expand from one operator to 50 operators.
And Tom, meanwhile, what's going on the regulatory front here in Australia? It appears to have gone quiet because, a year ago or so, there was pressure being ramped up on the government to actually crack down on gambling here. How would you describe what's going on now?
Look, it's been a period of increasing taxation and regulation. It's really played into scale. You need scale to be able to have that operational leverage to be able to pay the taxes, pay all the marketing costs, pay all the employee costs. And you've seen consolidation in the market here in the sports betting market. Obviously, there's monopoly licenses for land-based casinos. But the biggest shift here is it's played that this regulation has forced that there's a few large operators in sports betting, and obviously there's the monopoly operators in the land-based, but it's caused big leakage. There's a lot of leakage going outside of Australia because you're not allowed to bet in play for sports betting. So once a game's started, you're not allowed to bet, and you're not allowed to have online gaming, you're not allowed to have any casino games online in Australia. And so they're two big areas, and this has made it a very lucrative environment for the black market operators that are facing Australia. So the Australian regulators have got this challenge. They want to tax and they want to regulate, but they also want to do it in a way that they're getting the whole pie and they're not allowing that leakage. So yeah, I think the challenge is, how do you stop the leakage offshore, and how do you create an environment where it's high taxation here, they're still getting their tax dollars, but they're allowing, or they're really making sure that the operators here keep the customers inside Australia.